All right, what's up, guys? Good to see you. So I have on stage with me today Peter Jonas, CRO at Paxos, and then also Ian Bode, president at Ondo Finance. We'll do some quick intros, and I have a bunch of questions I'd love to get into with you guys. So Peter, you've scaled multiple businesses. You were early at Facebook, Uber after that, and most recently president at Compass. So seen a wide range of roles at a wide range of companies. When it comes to Paxos, last year stablecoins processed 33 trillion in transactions. That's more than Visa and MasterCard combined. And as the invisible infrastructure for stablecoin issuance, Paxos is a huge part of that transformation. So today, Paxos powers PayPal stablecoin across 400 million users. Paxos also works with MasterCard, and most recently, like we'll talk about in a little bit, Charles Schwab. So very cool. Yeah. And then we have also on stage Ian, president at Ondo Finance. Before Ondo, Ian was a partner at McKinsey. He co-founded the global digital assets practice at McKinsey. So saw a lot of really interesting stuff there. And then for Ondo has tokenized over 200 US securities, over 3.5 billion in tokenized assets since you guys launched just recently in September 2025. The Ondo ecosystem includes BlackRock, PayPal, Morgan Stanley, Franklin Templeton, MasterCard, JP Morgan, so many big names. And the firm also co-launched a $250 million Ondo Catalyst Fund with Pantera Capital to help accelerate the tokenization and adoption of real-world assets. So great, such great experience, guys. We'll jump into my first question for you guys. So the tokenized market, the tokenized real-world asset market, stablecoins and real-world assets, or real-world assets specifically, just crossed $22 billion, which sounds like a big number. But when you think about it, when you think about the hundreds of trillions that's in traditional markets today, 22 billion is just a drop in the bucket. So I'm curious to get your guys' thoughts. What actually has to happen for this to go from where it is today, which is interesting, to really more inevitable and subsuming more of that or complementing more of that system?
Happy to go first. I think the simple answer to that question, quite frankly, is time. Mm-hmm. If you look at the adoption of this stuff, it is very much following a hockey stick, and that hockey stick is going faster from asset to asset. So if you looked at stable coins and how long it took to, right now it's at 350 billion, give or take. It took a while to get there, right? And for that stable coin total assets under management to reach about $10 billion, took many, many years. The next asset class to really start tokenizing was treasuries. It was just a very easy, seamless way to go from stable coins to treasuries. And about 2 years ago, that entire asset class was at $1 billion. Now we're coming up on $14 billion. So you can tell that the adoption is accelerating. And now with tokenized stocks, that's the latest category that we really launched. We launched our platform in September of last year. That entire category now is at $1 billion. So I fully expect it in the next, call it 18 months, to start reaching $10 billion. And then from 10 billion to 100 billion, 100 billion to a trillion, I think it ultimately just needs time. People need to educate themselves about what this stuff is, about how investor protections work, how they can use it on chain. So ultimately, I think we just need time in order for people to get educated and for an ecosystem to develop around these assets so that ultimately what exists on chain is better than what exists in traditional finance.
Do you think there are specific bottlenecks, kind of like hurdles that you think will drop over time in terms of adoption?
Well, I think ultimately right now the question still is utility, right? Mm-hmm. Where we see adoption is people who historically have not had sufficient access to these assets. Mm-hmm. And if all you're doing is providing access, that is a huge market. But that means you're probably going to struggle to really hit inflection points in the US where people already have access. For you to get acceleration of adoption in US and other developed markets, you need to make these assets on-chain better than what can exist off-chain. And I think we're starting to get there slowly but surely. You have markets that can be open 24/7. You can move all these assets, or you can use them as collateral on-chain however you want. You can start using your stocks on perpetual swap platforms as collateral to very seamlessly enter a carry trade, right? Good luck doing that in TradFi. So you're starting to get to the point where it's getting better on-chain, but that ultimately is going to be the test to reach, I think, trillions of dollars over time.
Yeah, and I completely agree with that. I think about this from a little bit of a different angle, but building on that. having seen these inflection points in different shifts in the market. So with mobile, similar things. We're now seeing it here. It really comes down to Ian's point. To like, is it better? And the reality is, it is a lot better, and it's better not because of the way it's being utilized today, but the tools that tokenization actually brings to the table. And so you think about atomic settlement. That has a massive value from a haircut that you need on margin and the capital efficiency of those assets. Even treasuries are higher utility when they're tokenized. They go from being idle to being able to be moved at settlement. And being able to be used as collateral and more fluidly. You also get into the idea of just the access to new assets, and so that is better. These are the sorts of things that start to make meaningful differences. And frankly, those differences are what unlock growth, where suddenly you're able to do things that you were never able to do. And the structure, programmable also, is another element that makes this unique. The way that they're being utilized today, that those primitives are being utilized today, is not the way it's going to be utilized in the future. And what's beautiful about that is we've seen this happen with traditional finance, that there's continually more and more innovation based on the same existing primitives. What happens when you start? It's not that you have all of these giant TradFi companies coming into the space, although that is very, very good. It's what they're going to do with the brains that they have there, the capital they have there, and the innovation that they're actually going to be able to drive that's going to create this tipping point for the industry where what we're providing from a tokenized assets perspective is truly 10x better, enough to not just shift it one company at a time who starts to see the future, but instead to make it a mandatory need to move now, and the assets move fluidly to where they can be most effective.
Yeah, so speaking of that, like innovation, assets that are 10 times better, primitives, and forcing people, the industry to adapt to that. Like you guys recently are kind of like now the behind the scenes crypto infrastructure for one of the largest wealth managers in the world. I'd love to hear a little bit more about that.
Yeah, so we recently, Charles Schwab recently announced Schwab Crypto. We're very, very excited to be partnered with them on that. They're an extraordinary organization, sends incredible signal to the market that now is a time that everybody needs to take crypto seriously. Beyond that, it's their story to tell. And so next year you'll have to get them up here to talk more about it. What I can say is, as we deal with a lot of companies like this and have dealt with a lot of companies like this historically, the things that have made companies entering the crypto blockchain space successful are pretty consistent. One, they focus on the user demand. So they understand what their user, we talked about this with JP Morgan a few minutes ago when Kristen was up here. They understand what their users want, and then they seek to provide that. It's not that they don't know where they want to go, but they understand what they're trying to do, and there's a job to be done that they want to service. The second piece is dedicated teams. So there are a lot of organizations out there that have put their toe in the water. There's an innovation person who is doing this and. And not that that person isn't capable of doing it. A lot of those people are extraordinarily bright, but this needs the focus and the dedication to break through those roadblocks they're inevitably going to run into, and to be held accountable to driving a P&L associated to blockchain and crypto. And then the final piece really is to not get distracted by the bright, shiny objects. And so there's so many cool things you can do, and all of these companies are certainly aware of them. But the starting out on day one with perps is probably not the right path. As awesome as they can be, that's not the right path in this like crawl, walk, run process. And so we really push organizations to define the job to be done, to narrow in that scope on what they want to do, and then they can take it and be aware of where it could go, but really focus on getting near-term objectives solved.
Yeah, it sounds very grounded. So it's not just like hype or crypto for crypto's sake, but really like what are the business goals and how do we use the new primitives that we have available to accomplish those goals?
Exactly. When you think about all the companies that had like the crypto for crypto's sake projects, and those are dead.
Yeah.
Right? And yet there's more people than ever the prices aren't going the right way, but all of the industry adoption is. And so there's more people than ever that are dedicated to this transition of utilizing this technology in a myriad of different, very high utility ways.
Yeah, absolutely. It's all about adoption. I couldn't agree more. And speaking of adoption, question for Ian, like Ondo has seen a lot of organic growth week over week, especially with a lot of meaningful flow coming from different parts of the world, like Asia, investors buying, stocks that we all have access to, like Tesla or QQQ, but directly in a wallet, no brokerage required. Like, what does that demand tell you about the size of the opportunity here, and what is next for you guys there?
Oh, yeah. I mean, the size of the opportunity is enormous, particularly if you measure it by the number of users that are out there that still want access to U.S. capital markets, but historically have not been served well by legacy financial institutions to get that. I think finance has done a lot of things extraordinarily well, but access is not one of them, right? And there's a lot of reasons for that. You can criticize KYC as a concept in and of itself. There's minimum fees. There's just a whole bunch of reasons why, particularly once you go outside the U.S., people have struggled with access to U.S. dollars. That's why a stable coin is so powerful. And U.S. capital markets. That's now why tokenized stocks, ETFs, et cetera, are so powerful. We're seeing that directly in our numbers, 5 to 6% week over week growth since launch in numbers of users as well as assets under management.
Wow.
And it's not slowing down. If you then, the scale of that opportunity in of itself, we talked about Charles Schwab, great company. There's other, large brokerage platforms in the U.S. But I feel like people forget, I think Binance in and of itself has more crypto accounts than there are brokerage accounts in the U.S. Right? That is the scale of opportunity. That is the scale of these platforms. So when Binance then lists tokenized stocks, that's a big deal.
Yeah.
Both from a distribution perspective, obviously for Ondo, but fundamentally also just to have people globally have access to the U.S. capital markets, which has been, quite frankly, the motor of wealth creation for the U.S. consistently for decades. Just opening that up to a global audience seamlessly, I think is a much bigger deal than what a lot of people think.
Yeah. I think people, I 100% agree with that. I think people forget that there's a profound difference in how people interact with money outside of the country that we're in, or the countries that many of us have flown in from. And as a result, just getting access to the stability of the U.S. dollar, and that's why
100%.
stablecoins has so much pickup in the global South, and then the democratization of the risk-free rate. Like, there is just a huge amount of value that is unlocked in these markets that is not necessarily, the people in this room have money market funds and they're getting pretty darn close to the risk-free rate. And the people in this room don't have an issue with banking necessarily, or we do have an issue with inflation at times. But the rest of the world has a much different experience, and stable coins in particular and crypto rails really are 10x improvements over where they are today.
Yeah. Would you guys say it feels like stable coins and tokenized securities are really symbiotic? Like, you on-ramp onto stable coins, you can get access to tokenized securities, vice versa. Like, how do you guys see that?
I think that's exactly right. I'm very grateful for stable coins because people globally and also in traditional finance can now finally wrap their head around why does blockchain even matter in the first place, quite frankly, right? You take cash that, operated pretty well in a bank account for all intents and purposes. I mean, we can criticize the settlement delays and the fees and all sorts of things, but, cash, you could send it around, but then all of a sudden you put it on a blockchain with a permissionless wrapper around it, ta-da, right? 24/7 global payments, and on top of that, it works in this marvelous permissionless ecosystem called DeFi that has had its struggles, but is a viable alternative to legacy financial rails. That finally, people are like, oh, seamless access to the US dollar to a global audience that's never had it, and parallel financial rails? Sure, I'll take that. And that same concept, Ondo just applied to treasuries, stocks, and ETFs. And it is such an easy pitch these days to just tell people, yeah, we do for stocks and ETFs what stablecoins did for the US dollar. And people are like, oh. And the number one question you get is, wait, why is that better? And we're like, well, you have a Robinhood account. Most people don't.
Yeah.
So it's actually better, and it's much easier for crypto exchanges to list tokenized stocks than it is to work with the normal clearing broker, because you can keep your markets open 24/7. You can do settlement with stable coins 24/7. You can use custody infrastructure. You can do self-custody of your stocks. Imagine that. Freely transfer it between platforms. So it's just a much easier. People are finally starting to get, oh, that's what that's about, and that's why DeFi matters. But it was stable coins that led the way.
Yeah, and on top of that, stable coins used as collateral, like a USDG, which we're the issuer of, you can use your collateral now can have rewards associated with it. And so it's not just sitting dead cash, it's able to earn for you.
I think one of the interesting bits too is the key difficulty right now for us as an issuer is the legacy financial rails. Because you're dealing now with an ecosystem that operates 24/7. I mean, same thing with stablecoins, right? What is the difficulty historically with the stablecoin is being able to meet redemptions into cash 24/7 whenever you would need it. And finance has adapted and built some systems to enable that. But the same thing now holds for stocks, ETFs, and treasuries, right? How do you, if we get a subscription into our tokenized stock product Saturday 2 a.m., we'll take it, we'll give them treasury, and they can start accruing interest immediately. But how do we take that money and then actually invest it into treasuries over the weekend? That's really, really hard. TradFi does not do that. Same thing with stocks. Our stock minting and burning is not open over the weekend. Why? Because the NASDAQ and New York Stock Exchange and every single venue is down, right? But people still want to buy the stuff over the weekend.
Yeah.
So over the weekend, we have to shift to a fully pre-funded model. But it just shows you how we've already reached the point where blockchain rails are better and TradFi is catching up. And that to me is like wild, but it also means that for a lot of these other assets, like stablecoins, they can now, it's oftentimes easier and better for them to hold their reserves on chain.
Right.
And that's where we're also seeing a lot of growth. If you're a stablecoin issuer, why would you have your treasury sit off chain? Because those legacy rails don't work as well. If you can just hold your reserves in tokenized treasuries on chain, probably better. You can move them around 24/7. It just makes for a better ecosystem. So it's actually very interesting to see as more and more assets tokenize and move on crypto rails, you can have these assets just get better and better and better because we don't have to rely on these legacy systems as much.
Yeah.
Speaking of TradFi regulation, Paxos received OCC approval in December.
Yeah.
That's federally regulated, Genius aligned. First mover, really. Most competitors are still kind of navigating the state-by-state patchwork. Like, what does federal oversight by the OCC actually change for institutions that you guys work with?
So, first off, it's nice to have one set of rules.
100%.
Right. That's the first and foremost. You want to have. You want to be regulated by the most trusted regulator, and you want to make sure that you have clear, consistent rules. So it definitely is amazingly helpful for our partners as they're doing their diligence on, this is a very big stamp of approval that we have there. Fundamentally, we've always been, so we've been around since 2012, for anyone that doesn't know Paxos. We've been around since 2012, so we were before Ethereum. We've been regulated longer than pretty much anybody in the industry. We've always had this regulatory first thesis. And the reason is, from day one, the way that this mission of replatforming the financial system, the view of how we were going to achieve that was never to build the next JP Morgan or Charles Schwab. It was to enable those companies.
Yeah.
And so as you think about this future of all the conversation that goes on around who's going to be the future Charles Schwab or the Charles Schwab of crypto, the answer is Charles Schwab, right? And you heard Kristen earlier, and for them as well. But we've always been regulatory first because we believe in order to be a partner to them, there are really kind of three pillars there. One, regulatory first. You've got to be trusted. You've got to do the right thing there. And there were ways that we could have grown a lot faster in earlier days by not doing that. but now is our time, which is great. The second piece is really you can't be competing. You have to be a platform that's here to serve your clients and customers or partners, not to compete with them. And so we're very much we are focused on serving our partners, not going out and trying to onboard end users. And then really the final thing is you have to be enterprise grade. And so that's why we've been able to, onboard, we mentioned Schwab already, but Interactive Brokers, we have Stripe, we have Mercado Libre, we have some of the biggest companies on the planet that rely on our PayPal, that rely on our infrastructure. And so we've been very, very thoughtful about not building this out of a garage, but funding it extremely well and building for that enterprise state so that as this moment came, we were ready to be the service provider that those partners really need.
Yeah, absolutely. As an infrastructure company ourselves, very much understand and resonate just how important it is to be reliable and to deliver kind of like the quality of service that your partners need. So
totally, that's the number one job to do. Is you need to work. You need to work when they ask your product to do something, it better do it.
Yeah.
And so as much as in Silicon Valley we want to talk about the move fast and break things, this is not a world where you can do that.
Yeah.
Because there are real consequences and expectations for their end customers.
Yep. So the New York Stock Exchange and NASDAQ, they've both signaled interest in 24/7 trading. What does that mean for tokenized securities and, with agents and AI just around the corner and happening today? How are you guys thinking about all that?
I think it would be amazing if they turn on 24/7 trading. I can't wait. Because the way for tokenizing stocks and ETFs and just broader financial products, we only tokenize stuff that is publicly traded, right? So we have to, whenever we mint a token, we have to then go out and buy the underlying asset on the New York Stock Exchange or the NASDAQ or wherever it is to collateralize that position. It also means that over the weekend, when we can't actually go out and buy it, we can't mint new tokens. But all of our clients, think of the Binances, the Gates, the BitGets, the OKXs of the world, their users are used to trading 24/7. They want to trade 24/7. So right now, in order to keep these markets open 24/7, over the weekend, there's market makers who then deploy a market, pretty wide spreads, all from pre-funded inventory, because we can't mint them new tokens if they need to, right? And that's very capital intensive. Not a good system. But it's right now the only way to do it. Yeah. So at the moment, NASDAQ and New York Stock Exchange enable 24/7 trading, it's great. We can just mint and burn over the weekend. The spreads are going to tighten a lot. You're going to be able to serve an entire offshore market in the way that the US right now is served. And we'll be very seamlessly at offering that liquidity to those offshore markets by tapping seamlessly into the New York Stock Exchange and the NASDAQ. So I think Ondo's role in all of this, quite frankly, is to be a segue of that liquidity into the Binances of the world. But it does mean they have to turn on their market 24/7 so that we can actually put it there.
Yeah. I love it as a signal for crypto too.
Yeah.
This is very clearly created by crypto demand and
100%.
Adapting to what they're hearing from the crypto enthusiasts. And so I love it as a signal for the legitimacy of crypto in the future that they see for features that are specific to crypto today, like the 24/7 as as real value to their end partners.
And the fact they're doing it on tokenized infrastructure is also very interesting, because both of them have concluded for us to move to 24/7 systems, the easiest or most straightforward way to do it is by tokenizing and having blockchain-based infrastructure.
Yeah.
That's so cool to hear. What an exciting world we live in. Guys, give me a round of applause for Peter and Ian one more time. This was great.
Thank you so much.
Yeah, thank you both. And that's a wrap on our morning sessions for now. To those on the live stream, here in person, we're going to feed the machines. So go touch grass, take a break. We'll be back on stage at 12:30 Eastern Time, so we'll see you there.
Thank you.
Guys, that was awesome.